Well, iron ore producers have found themselves in the front line of the trade war. In an abrupt reversal of fortune, iron ore is in a bear market now, a 20% slide in price ending a 6-month bull run. Our reporter Rachel Pupazzoni spoke to Fortescue Metals CEO Elizabeth Gaines at Diggers and Dealers in Kalgoorlie.
Elizabeth Gaines, welcome to the business.
Thank you.
When Donald Trump tweets, we often see huge market reaction, and there's been the story for the last couple of days. Iron ore prices have come way back. How closely are you watching that?
Oh, I think the whole world watches what Donald Trump tweets. I think in the context of what we're seeing, though, in China, is the first half of this year we've seen an increase in crude steel production up nearly 10% at 9.9%. So it's in very strong fundamentals in terms of steel production and therefore demand for seaborne iron ore. So we're sort of less focused on the benchmark iron ore price. We're more focused on our product mix, our own strategy and delivering on that strategy. And we've seen our average realised price increase over and above the benchmark price increase. So we've actually outperformed, and we've done that through enhancing our product mix.
The Chinese yuan has been devalued overnight. What will that do for your business?
Well, we sell in US dollars predominantly, but we also have just set up a wholly owned foreign entity in China. So we're actually selling directly in China to customers in the local currency. So we have a bit of a mix in terms of our opportunities. But I do think in currency more broadly, there is a lot of volatility. We've seen the impact on the Australian dollar as well. Given we report in US dollars, actually that lower Australian dollar actually sort of improves our financial performance. So it's a whole mix of different aspects of what we're seeing in the market currently. But we continue to see that very strong demand for seaborne iron ore, and that's underpinned by that steel production which we saw in the first half of the year.
Yeah, the rally that we saw in prices in the first half of the year was unexpected by a lot of people in the market. Were you concerned that we might see some pullback like we're seeing now?
I think the rally was not unexpected once everybody took assessment of the impact of that terrible tragedy in Brazil in January. That's the bit that was unexpected, and it was a terrible tragedy. But what we saw is that the market reacted as you would expect it to, because there was a supply disruption. So 90 million tonnes have been coming out of the seaborne iron ore market did have an impact on price, particularly where you see strong demand. What we've seen since then is we've seen some of that Brazilian volume has come back into the market, and I actually think we're seeing the response in the iron ore benchmark price that one would expect as more volume comes on stream. I think for us, it's less about trying to predict that iron ore price, because it will be volatile. It is more about managing our costs, being the lowest cost producer, optimising our margins and delivering on our product mix strategy.
Do you think that the price will continue to fall?
I never predict prices. So I think there is volatility in the market, and what we've been saying for some time is the market is cyclical in nature. It wasn't that long ago the iron ore price was $70 a tonne, and today we're just below $100. But what we've demonstrated at Fortescue is by actually our disciplined capital management, by keeping our costs low, we're generating very strong margins, and we've continued to do that through all of these market cycles.
Reporting season is well and truly underway. FMG will release its results later in the month. What can shareholders expect?
Well, we just released our quarterly production report, so I think a lot of the news is already there. We had a record June quarter where we shipped 46.6 million tonnes. We shipped 167.7 million tonnes for the full year, and we realised an average price in FY19 of $65 a tonne, and that was up 48% on the previous year. So I think a lot of those key metrics are already known and understood, so there shouldn't be too many surprises when we release our results.
You paid a special dividend early in the year. Will investors receive a healthy bonus again this time?
Well, that's a matter for our board when we actually finalise our results. So we have a dividend policy which is to pay out between 50 and 80% of net profit after tax, and we've certainly reiterated that policy recently.
Elizabeth Gaines, thanks very much for speaking to the business.
Thank you.